Hi, I'm Laurence Parker-Brown. Welcome to the Inside Network. Today's emerging markets as an environment is potentially a once-in-a-generational opportunity. For the last decade, developed economies have seen most of the investor attention. But right now, we see a few different themes converging. One is the GDP growth that we can see in emerging markets, the earnings per share growth of some of those listings. And we also have potentially that ability to look at the valuations and maybe a disparity. So there's an opportunity to feel that there's a compelling opportunity set with emerging markets. And to discuss that, I'm delighted to be joined by one of the Morgan Stanley Equities Investment Team for Emerging Markets, Steve Sun.
Thank you for having me. I'm very excited to talk about emerging markets, area I'm very passionate about.
Wonderful. So we've covered some of the basic themes. Why is this a particularly right now compelling investment opportunity?
I think to your point, in terms of emerging markets, we think it looks very interesting because it's also had very tough 12, 13 years when developed markets, and particularly U.S. technology companies, have really been the only show in town. And if you put me back 10 years ago, I myself should have put all my money into technology companies. But I think there is now room for diversification. And as you alluded to, we are starting to see some growth come out of emerging markets. And setting aside China, which I'm sure we'll touch upon, but there are other pockets of growth coming through in other big emerging markets, including India, Brazil, and to some extent, places like Middle East, Saudi, which become a much larger portion of the emerging market universe that we're investing in. And the other thing as well is because of the recent underperformance, valuations look very, very compelling to us. Even if you were to take a massive cut in earnings compared to what US is trading at, we do think there are some quite good values if you know what you're looking for.
So let's pick apart some of this generational opportunity. Looking beyond China, can other emerging markets tap into these key thematic drivers that we see as potential areas for outperformance?
I think clearly the investors' attention have now shifted to India. So I think they will benefit from this China plus one strategy. But even setting aside the manufacturing part, we're finding a lot of growth in parts of India where we saw similar growth in China probably 15, 20 years ago. So whether it's manufacturing, whether it's consumers, and most recently, even the rise of domestic brands. And I think for India, there's always that argument, isn't India expensive? And our view is that India should always be trading at a premium to emerging markets. And it should definitely be trading at a premium to China just because of the earnings growth, visibility in terms of regulation. And I think the other thing is that you have some really amazing entrepreneurs that are based in that country. Setting aside that, I was just recently in Riyadh. Saudi Arabia has become a market where I think investors need to pay attention. It is a country where the growth in middle income, growth in consumption, and the government's clearly making a big push in terms of tourism, which should all sort of feed into the economy overall.
So the Middle East you touched on is quite an attractive space. It's modernizing quite rapidly, a lot of regulation that's changing. Where do you see some of the opportunity set being most compelling?
So I think when we talk about Middle East, the first thing most people and most investors talk about or think about are the oil companies and the energy companies. So setting that aside, if you look at the markets right now, it's been predominantly weighted by big banks. However, even in addition to the banks, we're also finding opportunities, even things like quick service restaurants. So there are companies that provide the Burger Kings or Dunkin' Donuts of this world. And that's been a growing area where the youth consumptions are also changing. And this is something that we've seen happen in Korea, happen in China, and clearly happen in India. And I think it's a global phenomenon.
You touched on it earlier that we've seen the compelling story of India, and that's in its demographic profile. Within the current EM terrain, China is still a large part of that universe. Is it still investable?
I think we would probably answer that question a little bit differently, because if you talk about China in its broad form, you're still talking about an economy where you have 350 million middle-class consumers. To say that entire universe is not investable, but I think perhaps a bit aggressive. I think you have to be very disciplined about the places that you want to be invested in. So for us, there's a big pocket of what we talk about sort of China 1.0, which has been sort of the old industrials, old banks, which is not going to see growth. And those banks, which were cheap 4 or 5 years ago, trading at 7 times PE, are now trading at 3 times PE because there's no growth. We also think that the China 2.0, which has been sort of the Chinese consumer internet companies, they've had their growth phase. So for us, we're really excited when we talk about China 3.0. So these are the new high-end manufacturing, so stuff like EV, which has become a big, big focus. We're also talking about the shift in the policies and growth. So it's no longer going to be about manufacturing exports. It'll be much more about domestic markets, high-end manufacturing, and much more value-added in terms of what they're exporting to the rest of the globe.
In terms of the leadership that's coming through, who do you see as being at the forefront in your mind within the emerging markets opportunity set?
We think in terms of the markets, it really still comes down to those big, large economies. Because at the end of the day, I'm based in Singapore just for traditional reasons, but Singapore is never going to have $100 billion consumer company just because there's not enough, the economy is not big enough. But if you think about the big economies outside China, you're talking about India. Clearly, Brazil has done a great job in terms of central bank. And if you look at Southeast Asia in aggregate, you have places like Indonesia, which is still seeing a massive amount of growth. So those are places where we're seeing growth. And I think there's going to be pockets of growth depending on the thematics or opportunities in Eastern Europe or in parts of South Africa. But that's been much more difficult to find for us.
You spoke earlier about the decade differential between developed and emerging markets. For 2023 and beyond, what role do you see emerging markets playing in an institutional portfolio?
We think there is still a role. So setting aside whatever has been happening with China, the diversification that emerging market provide broadly to a portfolio level. And the other reality is that unlike US or some of the developed markets, EM has already gone through a significant cuts in earnings already. So the valuations that it's providing, so really comes down to everything has a price. So it's really about risk and reward. We do think we're at a time where the sentiment is not just bearish, but we're also getting to a point where people just don't care. So apathy for us is a great time to be looking at anything. Not when everybody's so bullish. So while we still like themes like AI, for example, there is going to be a growth there, but what you're paying for that AI theme versus what you're paying for that EM growth. And we could make an argument, EM still has some fantastic growth ahead.
Tapping into that fantastic growth, you've got a very capable team, a large team. How do you work in terms of that process to make sure that you're filtering the opportunities, the characteristics you're looking for? What does that look like within Morgan Stanley's emerging markets equity team?
Yeah, I think for the emerging market equity team's been around since '86 is the year. So the team is really split to where the opportunities are. So our headquarters for the team is based in New York, but we have offices in Hong Kong, Singapore, Mumbai. And then we just recently signed or took over a majority stake in a Chinese joint venture. So we get together as a team to discuss ideas on a weekly basis. But as with a lot of the investment analysts and teams, it's really about those discussions on an ongoing basis. And the reality is that there's been so much happening on any given day. I think those weekly calls probably are going to be enough. And I think the one thing that really separates the team a little bit differently is that because of the history of our team, we do tend to also focus on a lot of the top-down macro issues, top-down political issues, because we do believe those matters. Now, once you have that framework, it's going about there finding the right opportunities from a bottom-up perspective. So for us, since sort of COVID restrictions have been lifted, travels have picked up quite dramatically. And I think we were talking a little bit earlier, that face-to-face interaction with management to us is vital, it's essential. And you need to go sort of so-called boots on the ground and find out how things are happening. And I think going back, not to harbor upon Saudi trip, but I must say, last trip to Saudi, people are so friendly. It's one of the most friendliest places I've been to it in a long while.
It's a friendly place, and it's obviously a space that's quite interesting. So as a senior portfolio specialist at Morgan Stanley's emerging equities team, it's been a real pleasure to learn from you today, Steve Sun.
Thank you so much for having me.